2024 was an excellent year for the US economy on the back of very strong and robust labour market and consumption. With Trump's very pro-growth policies, we think that this is likely to be sustained, particularly with tax cuts and also deregulation. We expect the US economy to continue to grow at 1.8% this year, albeit slower than the previous years. Of course, there are certain risks out there. And one of the key risks that we've identified is clearly the political intent and also the policy implementation. You see, markets are erratic. If you overpromise them, they will unfortunately react negatively. And if you underpromise them, they will react very negatively too. As such, the pace and the size of the policy implementation can have a material impact on market sentiments. Secondly, tariffs. Tariffs will equate to trade tensions and potentially trade wars. It doesn't benefit anybody. In fact, it might also be inflationary in nature. Inflation will then ultimately lead to higher interest rates, and cost of living, and companies will have a higher cost of manufacturing. Whilst the US economy continues to look strong, it doesn't mean that other countries will fare badly. Since 2018 to now, whilst trade between the United States and China has fallen by 15%, US and the rest of the world has grown by 43%. We think that Asia continues to hold significant value. If you think about it, valuations in Asia looks attractive. It is trading at just 14 times PE vis-a-vis 22 times on the global front. Asia also boasts a more profitable earnings to growth ratio, which is extremely attractive from the mid to longer term perspective. At the same time, we look forward to potential stimulus from the Chinese government, which could potentially support the Asian rhetoric. Drawing this conversation closer to home, we think ASEAN is a big beneficiary of this conflict. US and China are likely to see relocation of strategic importance and manufacturing sectors, and this is likely to land in ASEAN. And ASEAN has been one of the key beneficiaries of the Chinese Plus One policy, and it will continue to gain from this. Last but not least, we think that Singapore continues to be an attractive ground for investors to consider, particularly on the financial front and also real estate investment trusts.